And I'm recording. So thank you to the student who offered me to record. You can stop recording and send me the video via WeTransfer or something like this. That would be super, super nice. And I really, really thank you a lot. And we all thank you a lot, I guess, because we all will get, the opportunity to look the video. I had the video, okay. Maybe you can, I don't know, WeTransfer, or is it because it must be quite a long one, quite a big one. Okay. Did you have the time to finish? I think it's not a complicated one. 7 points. So Mr. Kian, 760. I don't remember. So, okay, I'm sharing the. No, it's a little bit less than that. Actually, it's 5. What I have is 5 to 46. Yes, so Luang is correct. Sorry. So Luang is correct. So let's have a look at what we have. So the quantity of red oak we want to have in the ending inventory. So red oak we want to have 80,000. And we want a cost per unit of. Actually, we could do this. For the ending inventory, we already did some job about this, right? For the red oak, we want to have ending inventory red oak 7, okay? So we can take that directly from material and material and labor cost budget, because this is what we did that already, right? We did that. So we just have to use this information. So this one, I'm gonna take it from here then. Yes, this is correct. And I can even drag my formula because, it goes. Okay, maybe this one is better to do formula like this. Okay, sales price. Okay, so that's why. Casual, so what is the quantity we want to have? This one we maybe need to go take the information here, 10,000 for the casual, and we target to have 500 for the deluxe. And of course, now we're going to use the information we just calculated here, right? The production cost. And so now we have the valuation of our inventories. So for the finished goods and for the raw materials. So these are the raw materials. And these are finished goods. Okay, so that's valuated at purchase price, right? And that is valuated at production cost and not, of course, the selling price, because it is forbidden, right, to put sorry, I don't share the Excel. Okay, sorry. You can't see it? Okay, sorry. Okay, so I'm going to do it again. Okay, so for the quantity of red oak, I go here in the ending inventory. Okay. For the granite also, I already worked on this this thing, 20,000, okay, at $10. And for the casual, so finished goods, we have here the targeting ending inventory of 11,000, and for the deluxe, we targeted to have 500. And the cost, we just determined it, right? So this is what we have. We have two raw materials which are valuated at purchase price. So $560,000 represent the total value of red oak that we have in our ending inventory in our balance sheet. So certainly this one, the 5 million 246 certainly is an information that we will find in the balance sheet. Okay. So this is also why we did this. And so just to finish what I wanted to say, the finished goods here are evaluated at the production cost and not the selling price, right? Okay, so it's this is it for this schedule. Do you have? So I hope you were able to see everything in the Excel file now, the second time. And so, okay. So do you have any question about this schedule, 6B? Okay, so let's have the break now, 20 minutes. So we're back at 8:45 for the next step, okay? And enjoy your break. Okay. So it's 8:45. So it's time to come back to the second part of the course. So what we're going to do now, we're going to try to finish this case by 10 p.m. So our next step is to do Schedule 7. So it's cost of goods sold. Okay. So it's just, there's no really, there are some calculations, but they are not so complicated. In this one, so you must find firstly the information about the beginning finished good in inventory. Okay, so that must be something you can find in the data. So direct material, these four things go together. Okay, so direct material use, direct manufacture equal to cost of goods manufacture. Okay, this one equal to this one. Okay, so cost of good available for sale is that is 1 plus 2. Okay, and that's 3, and 4 is equal to 2 minus 3. Okay, so it's of course it's in total, so it's in dollars. So it's not very difficult. Okay, and so for the cost of goods sold, you should, so I don't tell you because I know you like to share your answer in the chat. So try to, so what we want to know is to calculate the cost of goods sold. What is the cost of goods sold? Is the cost of goods we had in our beginning inventory plus the cost of goods we manufacture, okay, minus the cost of the goods we have in the ending inventory. Okay, so this is cost of goods at the beginning. Okay, cost of goods manufactured during the period, and cost of goods left in the inventory at the end of the period. Okay, so it's not complicated in terms of calculations. So I'll let you try to do it. I'll give you 5 minutes. So it's 8:48. So I'll go back in 8:53 so we can move on to the next step. So we can maybe try to finish this case today so we can, you know, be fresh start for our new chapter tomorrow. Okay, so I'll let you 5 minutes. Is there someone in the chat that can confirm me that you can hear me and see me? It's because I don't have feedback, so you know, it seems to be okay for me, but just to be sure. Okay, thank you very much. Okay, so good luck, and 5 minutes we correct this one. Thank you, Don. Okay, 2 more minutes. So you should find, as Mr. Kian is sharing, you should find 24 million.44. Okay, so let's correct it together. So our beginning finished good inventory is an information we have in the data, I guess. We have begin inventory here plus here. Okay. Bravo to Ha, bravo to Luong, who found also. For the direct material used, this is actually what I was discussing with Mr. Kian, because if I may use your mistake for pedagogy, he took this line, purchase needed. It's not what we want now. What we want is a direct material we use for production. Okay, so the line we need to use is this one. Okay, the quantity need for production. Okay, so this is 10 million.28. Okay, because this is what we really use in production. Okay, direct material used. Direct manufacturing labor, same thing here. We can go here. It's a direct labor we used for during the period. And for the manufacturing overheads, it's the 12 million we also used during the period. Okay, so we should find a cost of goods manufactured of 28 million.28. So this is the cost we used during the period to manufacture the goods we manufactured during the period. Okay, so that is the cost of goods manufactured. 646, that's the value of the beginning inventory, okay, of finished goods that we have available from the last period. So these are costs used in the cost made during the last period, but we didn't use because the goods are still here, okay? So the cost of goods available for sale is the addition of the cost of the goods we had in the beginning inventory, we didn't sell yet, plus all the cost of all the goods we additionally manufactured during the period. So the total value of what we have available in our company, or we should have available in our company in 2021, is 28,926,000. Okay. Okay, so this is the total available we have, but we also have a prediction for what should be left in the company at the end of the period. We have a targeted in the ending inventory that we just calculated before here. So for the finished goods, we have these two things, right? And so we can now calculate the cost of goods sold. So it's beginning inventory plus goods manufactured during the period, manufactured during the period, okay, minus ending inventory. And so this would be what we have. Certainly, I take the risk to say it, but I think it's okay. So to be used in our income statement. Okay. So that is correct. Any question but this one? So we are, I think for the following steps are quite simple. So the next step, which is not simple, is the cash budget, but we still have a few things to do before. So any question about this one? No? Okay. So let's move to the non-manufacturing cost budget. So for this one, so you can see it's not very complicated. We need to calculate the total cost for non-manufacturing, okay? So we are not in the production cost, we are in design, marketing, and distribution. Okay, so we are talking about the costs which are not costs of manufacturing the product, but still we have to pay them, right? Like the design of the product, the marketing and distribution. For these ones, we need to know what is the total amount. It's not very complicated. We can see that there is a variable and fixed part for each of them, and we're going to calculate the total and calculate the total for the non-manufacturing. To do so, we just need to go to the case and just read together. So we are done with step 7. So now we prepare the non-manufacturing cost budget. Okay. So we have information. So product design first. Fixed cost. Okay. Determined on the basis of the product design work anticipated for 2021 for a total amount of 1,024,000. Okay. So for the product design, only fixed cost 1,024,000. For the budgeted marketing cost, we have a variable part and a fixed part. The variable part is 6.5 of the revenues, and fixed component is 1,330,000. Okay. And for the distribution cost, we have a cost driver, which is the number of cubic feet per tables. Okay. So we have 1,040,000 cubic feet. Variable is $2 per cubic foot. That's for the variable. And the fixed part is 1,596,000. So it's very simple. Okay. So I let you 5 minutes to do it. So it's 9:04. I come back at 9:09 to show you the solution. Yes, this is correct. And so, yes, so it's time to correct. So can you see my Excel file? I'm gonna share it again because I'm not sure that you. So now you should see it. So product design. So we have only a fixed cost of 1.24 million. $1.24 million. Sorry. So you should see my Excel file now. 1.24 thousand. Okay. So there is no variable part. So it's 1.24 million. For the marketing costs, they say it's the variable part is 6.5 of the revenues. So it's just 6.5, and then I go to the revenue budget. So this one. So 2.47 million. And the fixed part is 1,330. For the distribution cost part, it's $2 per cubic foot for the variable part, and we have 1,140 cubic feet, and the fixed cost is 1,596. So we reach, as some of you guys, Anne, Chong, certainly Luong now, Kian, I guess, Chong, here. So congratulations, everyone. So you reached the right number, 8 million.7. So we know now the total of our non-manufacturing cost is 8.7 million. Okay. Any question about this one? So again, what was most complicated for the cost was to calculate production cost, because production cost is always tricky because you have the indirect cost to consider and so on and so on. Here, by the way, we do not care about sharing the non-manufacturing cost between the products. We could, but we don't, because usually what is the most important thing is to calculate the production cost for one product. Non-manufacturing costs we could, but it's less important for us. So okay, now I think we can calculate the budget income statement. So just for you to know, operating income, oh, we have already an answer. I don't have the answer in mind, so I would check. Just let me present that to your colleagues. Here it's just gathering information, so it should be quite fast. And so I let you 5 minutes. And so we get two income statement to do, the operating income, okay? And then later on we do the net income. And so you see the difference between the two of them will be interest expense. And you remember in the Gordon case, to do the interest expense, we need to do the cash budget first, okay? So step by step. So please do the operating income statements. I'll let you 5 minutes. So nine. I go back to you at 9:19. According to my clock, the message I post in the chat is more for me than for you, so I don't forget. So you got 5 minutes to do it. Okay, and then we move to the cash budget afterwards. And so about Mr. here answer, I confirm you're right. Congratulations, Mr. here. The answer is 4,000,086. So Luong, I think you meant to maybe send a message to everyone, or is it only intended to for me? Okay, so Votai Cho, Mr. Here. I'm not sure about the pronunciation, but I understand that bravo can be said Votai Cho, Mr. Here. Yeah. Okay, thank you. So I make some progress in Vietnamese. I'm not sure. I still have a lot to learn. So Votai Cho, Mr. Here. So Votai Cho Tang as well, and Anne as well. Yes. So this one, congratulations, Anne as well. So this one is not so complicated. So maybe we can move. Okay, so revenues, we have them from the revenue budget. Cost of goods sold, we have it from the Schedule 7. Okay, so the gross margin is the difference. What I did here is, so operating design cost. And what I did here is that I summed the three of them. This is how I presented it. Operating cost. Okay, so we got 4.8 million, 4.86 million. So again, we don't care very much about details, totals column. Don't get confused about that, or don't spend energy on this. It's not important. What is important is the result you find. The way you present, it's okay, right? I don't care about the columns. Maybe one day I will suppress details column, and so there will be only totals column, so it's clearer for everyone. So don't care about the columns, care about the calculation. So you should find 4.86 million for the operating income. Okay. Any question about this one? Okay, so let me stop sharing for a few seconds because we move to the next bit, to the cash budget now. So maybe we can have a look at the case. Cool. So when I do that, normally it doesn't work anymore when I change the screen. So I do it again. Now you should see. So in budgeted income statement. Okay, we don't care about sensitivity analysis. I let you, it's just that if you change the selling price and blah, 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 if you have well done your calculation, it should be okay. I will show you, I will give you the PDF version of the solution so you can train with that later. We are a little bit late compared to, my schedule. So I would like to focus on what is more important. A little bit late, not too much. Don't worry about it. Okay, budgeted cash flow for 2021 are as follows. Okay, so in this cash budget, actually, I provide you with some information. Okay, so this is what we should receive in terms of cash from the customers. And this is what we should disperse for the different costs. Okay, direct material, payroll, overheads, non-manufacturing costs, some machinery purchase, in the quarter number 3, so it's presented by quarter 1, 2, 3, 4, because we get 4 quarters in a year and we are presenting budgets for 1 year. Income taxes, which are supposed to be paid. Okay, so we get quarterly data, which are based on budgeted cash effects of the operation from what we did. Okay, so I say also in the chapter, because this case is adapted from the book I recommend in the syllabus. So for you, if you want more details, you can go for this one. Okay, so if we have a look at the Excel file that I provided you with, you have also a part of the information which is already available. Okay, so it's because I wanted to focus on the on this part. Okay, so this is what we're gonna focus on. Okay, you know, the borrowing repayment stuff. So okay, this one we need also to fill in. Okay, let's not care too much about the year as a whole. Let's focus on one quarter, 1, 2, 3, 4 quarter. Okay, so you should find already the first information you should find, of course, is the beginning cash. Okay, and then you have all the cash receipts and disbursements. And so you have this famous line that I like, which is the line that shows the excess of deficiency of cash. Okay, so it's not finished for the moment because you need to fill in the beginning cash. Once you have it, you are able to think about what is the borrowing, ending, and so on. So you can see borrowing, it's different from what we did earlier. Borrowing, it's supposed to be at the beginning of the period and the repayment at the end. Interest is at 12%. Okay, so it's a little bit more tricky to do than the previous case. So let me share again the PDF version of the document. You should see it. So let's have a look. The company wants to maintain 350 minimum cash balance. Okay, I'm not sure it's included already. I don't remember. The company can borrow or repay money at an interest of 12% per year. Management does not want to borrow more than necessary. So again, we will repay as soon as possible. Okay. And okay, assumes for simplicity, it's a little bit more complicated, the assumption for the borrowings than in the previous case. Assume for simplicity that borrowing takes place at the beginning and the repayment takes place at the end of the quarter under consideration. And we borrow in multiple of 1,000. Okay, interests are computed to the nearest dollar, are paid at the end of the quarter. Okay, so be careful with this assumption. So because what you need to borrow, you need also to reach the minimum cash balance. So when you have your first assumption about the amount you borrow, you also need to consider what you're going to pay in terms of interest, and so you should borrow a little bit more. Okay, so I'll let you, let's say, around 10 minutes to try to do it. Okay, and I will show you for the first quarter how it works, and so we come back. Okay, so I'll let you try to do it. Okay, I'm gonna try to help you a little bit so you better understand how it works, because it's a little bit tricky, so it's not so easy for you to find in the first place. Let's begin with what is easy. We need to find the amount of beginning cash. Okay, so beginning cash, just to be transparent, is normally something you should find in the balance sheet at the end of the previous period. So you have 300,000 here. Okay. So that's our beginning cash situation. So that's easy. 300,000 from, sorry, 300,000 from the balance sheet. Okay. So we also have a minimum cash balance, which is desired by the company, and it's 350,000. Also an information you can find in the case, and I discussed that earlier. Okay. Okay. So okay, so we are here. So we can see that for the first quarter, we have a deficiency of cash, okay? The problem is that we need to borrow the money, which is actually the deficiency in cash plus the interest to pay during the quarter, okay? Because the borrowing is at the beginning and the interest is at the end, okay? At the end of the period. So let's say that we can say that for 3 months, the interest will be equal to the borrowing, okay, times 12% times 3 divided by 12, right? This is the amount of interest we should have. So if we just borrow what we need to 147, but as you know, you have to round it as a 1,000 number. So that would be this amount, okay, because you round it. You can see that we don't have enough cash, right? We need 350 and we have 286. So it means that, yes, we need to borrow more here so we can pay back the interest as well at the end of the quarter. So this is why I said that we need to have a little formula here. The needed borrowing would be, let me check first before I do some mistakes. So we would need to borrow this amount, okay, plus the interest. So multiply by 1 plus 12% for 3 months out of 12. Okay, so this is what we should borrow. And maybe I can put absolute value of this. Okay, so it doesn't appear with a negative sign. Okay, so this is the amount of deficiency in future value, taking into account the interests which are associated to this thing. Okay, so this is the amount we have: 2,211,703. Okay, so this is how I calculate my amount that I need to borrow. So let's say that I go for this one, but okay, we know that we can borrow only thousands of dollars, so I need to round it at the upper amount of $1,000 that I have. Okay, so let's go for it. Okay, so now we have this amount, and we can see that it's not enough for the cash balance because we need 450. Okay, so it means that now we just have to go for an iterative formula to see if it's enough. It's not enough yet. Yes, now it's enough. Okay, so we need to borrow this amount of money at the first place. Is that okay? Do you want me to do it again? Or is that okay? I can do it again if you want. Or is that okay? Just tell me in the chat if it's okay. it's okay. So now that you know how it works, I'll let you, okay, we get a wait from Kian. Why do we have interest in the first quarter? We have interest in the first quarter because we pay interest at the end of the quarter, every quarter. This is what is said in the case. So it's not like the previous example when we had quarters for which we didn't have any payment. So interests are paid at the end of each quarter. We have it here. Okay, so we have to consider each quarter. We have some interest to pay. And so we paid interest at the end of the quarter. So that is why I consider 3 months in the calculation, right? Here, this is 3 months, okay? 3 months. So this is January, February, and March. Knowing that we borrow money this time at the beginning, right? We borrow the money at the beginning. So we anticipate. So this is why it's different from the previous one. And this is also why it's more tricky for the calculation. We have to anticipate. And so we borrow 2.21 million on the 1st of January already. So at the end of March, the bank will ask us for the interest for 3 months for this amount, okay? And we want to have at the end of the quarter 350,000. Is that okay, Kian? Ah no, is that okay, Dong? Sorry. Okay, so Kian asked for, please repeat B19. Okay. Okay, so you know what? I'm gonna do everything again, okay? It's easier. So this is the beginning situation. Is B not exactly, because, okay, let's do it again. Okay, so the needed borrowing is actually the amount deficiency of cash plus interest. Okay, so time 1 plus 12% for 3 months. Okay, I did absolute value of this, I guess. So to answer to your question, Kian, this amount, 2,211,000 is a theoretical amount we need to borrow. We have to borrow both principal and interest in Q1 and have cash balance ending. Yeah. So we want to borrow enough to be able to pay the interest at the end of the quarter and to have 350,000 minimum. Okay. So this is theoretically the amount. This is a theoretical amount we should borrow. Okay, which is principal plus interest, okay, to have at least 350 at the end. Okay. So the problem is we cannot use this calculation because we borrow only thousands of dollars. Okay, so the bank do not offer to borrow this amount, so it's always rounded. It must be rounded, okay, at the $1,000, the upper one, right? So this is why I said that here we should say 2 to 11, 12. Okay. And do not forget that interest must be paid here. So it's this amount. Okay. Let me check. Yes, so this is the amount. This amount times 12% times 3 divided by 12. Okay, so if I borrow this amount, 2,212,000, this is the interest I will pay. Okay, but we can see that it's not enough. It's not enough. It doesn't reach 350. Okay, so then I'm sure that we can certainly find a more sophisticated mathematical formula to make it automatic. But we are not mathematical people, we are finance and accounting people. So from there, I think we can just, make some iterations to find the right amount. If we do 1,000 more, it's not enough. We have 349. If we have 2214, yes, we have enough. We reach the minimum cash balance we want. So to answer to your question, Kian, B19 and B24 are not exactly the same, okay? Let's say that the theoretical amount is B24 and B19 is the adjusted amount to the reality. This is how we can say it, okay? We need B24 to find B19, okay? So I would like you to, yeah, you're welcome. So I would like you to work on quarter 2, 3, and 4. Okay, at least let's finish cash budget for today. So of course, the beginning balance at the beginning balance of cash, quarter 2 is the ending cash quarter 1. Okay, so we can see here that we obviously have an excess of cash. So now it's time for you to discuss what you can pay back, knowing that you need to pay interest first. Okay, so what is firstly the interest you must pay here, and then how you can deduce the amount you can pay back. It's more simple than the first. Please use 2213,696. Why? 22. Here you mean? To have 350? No, you cannot, because the bank says to you that you round it to the upper thousands of dollars. So that's our constraint. Yes. Yes. So yeah. So it's just, you're right, but it's just because the case say otherwise. So that's it. But I see, Mr. here, that maybe what you want to say is that you would like to minimize the interest we pay, right? So yes, I mean, in that sense, you would like to minimize the amount of borrowings, so we pay less interest. But the bank says to us, we don't do exact amount. We give thousand per thousand. Okay. So I let you 5 minutes for quarter 2. And you can move on to quarter 4 afterwards, 3 and 4. And we finish this cash budget today. Yes, this is correct. Yeah, I'm improving my Vietnamese. Yes, that's totally correct. You totally understood. You totally understood. I think it's time for me to show the solution. So what I did, firstly, I calculated something here, which is the outstanding balance of the borrowing at the end of the quarter. So for the moment, it's 2 to 14, right? Because we did not pay back. And why do I do that? Because I'm going to use that as basis for interest calculation. Okay, next quarter calculation. So here, the interest of the second quarter will then be the outstanding balance at the end of the first quarter. Okay, times 12% times 3 divided by 12. Okay, because we have the same amount than the borrowing we did at the 1st of January, because we did not pay back yet. Okay, so the amount of interest, as Ha was saying in the chat, will be the same than for the Q1, right? Makes sense because we have the same borrowing amount. So here, yeah, this is correct. Congratulations here. This is 759. Okay, so now the question is, what is the repayment which is possible? Okay, so the repayment which is possible will be the cash excess minus the interest. Okay, so that's what you find, right? 759, 557. Okay, and actually it's not exactly so maybe I was wrong when I said to you this is the amount you can repay, because the repayment must be also in thousands of dollars rounded. So you can only pay to the lower number. So it's not exactly 350 you have at the end of the quarter, because you need to round it to the lower thousands of dollars. Okay, and so sorry if I said congratulations, and yeah, this is a repayment which is possible, but not the repayment we do because we round it to the lower number. So we had at the beginning of the quarter 2,214 minus what we pay back here. So this is the outstanding amount at the end of the second quarter. Okay, so that will be used for calculation of interest quarter 3 and 4. Okay, so sorry for that, because I see some answer in the chat. So now I guess you understand just a slight difference between what you have and what we should have. So the ending balance is not exactly 350, it's 350, 557. Okay, because we round the repayment to the lower thousand of dollar. Okay, so sorry for that. So I'll let you 4 minutes to finish, and I give you the solution before we leave today. Okay. I don't say to you what you need to reach at the end. So I would like to, I'm waiting for the cash balance to be found in the chat. So let's say 3 more minutes to try by yourself, and then I wrap it up with the 4 minutes I have left. So, okay, so Luong Q4, it's a little bit different from that for rounding issues, maybe. I've got 270, 354, and 4608. So maybe it's due to the rounding issues. For quarter 3, here you are correct for the repayment and for the interest, and also for Q4. So here you should be able to share with us now the ending balance for the cash, I think. Luong is not far, but it's question of rounding. Maybe misled Luong because of the fact that I forgot to say that we have to round the repayment also. but here you should be able to provide, yes, this is correct. So the ending balance cash is now provided by Mr. here. So it's 466,354. So Kian, repayment, it's correct for Q3 Kian as well. Yes, Zhang, that's correct too. Okay, so it's 956. So that's my ring to show you the rest. Okay, so interest in Q3 is ending balance Q2 times 12% times 3 divided by 12. Okay, and so repayment possible should be, yeah, should be shown this way, I guess. No, it's not correct. So repayment possible is, sorry, it's this amount. No, sorry, it's this amount minus this amount. No, it's not correct. So sorry, D18. Ah, okay, okay. Sorry, I forgot to put my beginning balance of cash up. So now that is correct. So we have an excess of cash of 1,445, 1,000,000.34, and so we can repay nearly everything that we need to that we have borrowings, okay, but we need to round it to the lower number again. So this is what we have, okay. So we need to lower the amount, okay. So the outstanding balance should be able to calculate. So we should have 154, which is 1,455 minus 1,301. Okay, so we nearly finished with paying, and so now I will not forget to put my beginning balance. So we still have an excess, 274. We have 154 to pay back. So that should be okay. Let's just check for the interest to pay. It's only 4,000, okay? So the repayment possible should be okay to be calculated like this, 270, which is 274 minus interest, okay? But we need only to pay back 154, right? And so we are done. So 154. And so we have now, for the first time, an amount which is higher than the minimum we want, 466,354, okay? And so, of course, we have the outstanding balance, which is 0, confirmed. Any question? So, yeah. So what I wanted to say to you here is it's the calculations are a little bit more tricky, okay? But now we are able to do it because, you know, we are more comfortable with financial mathematics and everything. So what we need to take away from this example is that the pattern to determine the borrowings and repayments will be somehow always a little bit different because they depend on what the bank, what are the rules at the bank, right? That being said, what we want to do is always the same, right? What we use here, the tool we are using here, it's to help us to limitate the amount we borrow, so we can limitate the amount of the interest we pay. Okay, so this is the goal of this cash budget. Remember, here we are physically in 2020, year 2020, the famous year 2020, so good for everyone. And we are doing the budget for 2021, okay? So here, what we are doing with the cash budget is also a way to prepare a document that we will go to the bank with, so we can negotiate with the bank, maybe the interest rate, maybe, you know, the level of borrowings, to be sure that we can have more than 2 million of borrowings if we need, okay? And maybe the bank will be, let's say, less stressed out to lend us this money if we present this very careful and very detailed cash budget, where we can show to the bank that according to our forecasts, the short-term borrowings will be finished by the end of the year 2021. Okay, so maybe it's helpful to have a better rate and so on and so on. Okay, so this document is for us, the company, so we can see that, okay, we're gonna have problems in terms of cash at the beginning of the year, but it should be solved by the end of the year if we reach the sales of the deluxe tables and the casual tables that we want, and so on. Okay, so this is the takeaway of this document. So I would like you to, we are not totally finished with the case. We need to do the budgeted net income statement, which is quite fast, and the balance sheet. Maybe you can try to work on these two documents for tomorrow, okay? And so I will share the solution directly with you when we begin. So we're gonna take maybe half an hour to finish the case, okay? And so maybe it will be helpful if you try to do it by yourself first, okay? So it's helpful for you as well. Which means also that we are behind schedule half an hour, because I intended to be finished, but it's no big deal because frankly, we are still on schedule, because for the next part, we usually do some exercises. Maybe we won't do them this year, which is not a problem. What I notice is that maybe it takes a little bit more time to do all the stuff together than when I'm in the classroom with you. Maybe it's also because you didn't have the other classes before by Eric Maton, Professor Chevalier. I don't know why exactly. Maybe it's because the online experience takes more time than the physical experience. I don't know. So no big deal. We are nearly on time, just half an hour late. So we will be able to finish everything. It's just that I need to organize. So what would be helpful for me is that you try to do it by yourself, this one. And so we finish together half an hour, so we can move to the variances, which is the next chapter, which is important for you, okay? And so that's it, okay? So I don't know if you have any other question. If you don't, because it's already past 10, so I guess you really would like to rest a little bit. So I'm gonna stop for today. So thank you for your job today. Thank you also. Thank you also to here for helping me with the recording of the first part of the session. You've been a huge help. So hopefully we will have 2 videos for today that you can find on the Canvas. And thank you for your help. And we meet tomorrow at 7 p.m. Okay, so enjoy your evening and see you tomorrow.